Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Nadine Blaney, and it's a Monday afternoon. Really nice to be here with you, the 18th of May, and we've got this global bond rout deepening. So we've got inflation really triggering those fears that we could see central banks right around the globe have to hike, let alone cut, as had been widely anticipated in the world's largest economy in particular. But yeah, Tokyo, New York extending that route today, and we're watching at the same time the price of oil continue to gather pace. So what's that meant for our local market? I don't think you need me to break the news to you, but we've gone sort of from bad to worse. Yeah, flatlining around this afternoon, but down by 1.2%. What is noticeable today is that it's not just an Australia story. We have seen indices, take the Japanese index, for example. It is down by about a percentage point. The Kospi in Seoul came out really weak, although it has sort of turned around, mildly positive now. And yeah, taking a look at US futures, they are both negative for the NASDAQ and the S&P 500. They did have their worst day since March on Friday, and I'm just looking at some of the data coming from China as well. And I mean, oil output, or throughput I should say, hit the lowest level since August of 2022. So there are some big cracks starting to form in relation to this war in the Middle East. China's economy really losing steam at the beginning of the second quarter. So we've got output disappointing in April, and also consumption as well. So all roads lead to the bond market. That's what I'm told. Let's take a look at some of our key themes. This is actually a 7-week low for the Australian market. So as I mentioned, we've still got the last trades going through the ASX, but down by 1.4% to 8,511. We've been so reliant on the commodity complex to save us from ourselves, but that didn't work out well today. For example, BHP is down by 2.6%. The gold miners all being sold off. I guess one exception there was Linus. Look, we did see industrial stocks, all industrial stocks, lower, a bit of an implosion, you could say, for those industrial names. And we've also, as I mentioned, had the dragon disappointing. So China's April industrial output growth, the slowest since July of 2023. Retail sales as well, rising just 0.2%. So here it is. Let's take a look at these industrial stocks. And a lot of it might be traced back to Brambles. It did downgrade its profit expectations this morning. Shares taking a really steep tumble, off by about 19%. And look, that was the way things went for any company that had some bad news out. It wasn't necessarily company specific news when it comes to these big miners on the next page. But again, we've got global growth concerns, big time. And so that has really put pressure on, the likes of some of those metals, the metals complex. You've got Rio off by 3.5%. But China, agreeing to address U.S. concerns over rare earth shortages, and that's what's behind Linus's. It's not on that page, I know, but Linus's big push higher. So let's get across some of the corporate stories, and that takes us back to Brambles, so downgrading for FY26. It's talking about repair capacity constraints in parts of its U.S. network, which led to increased costs, which also, limited its ability to meet stronger than expected customer demand. Revenue growth has been revised lower as well, so an extra $60 million earnings hit from the disruption. Singapore's telecom regulator suspended its review of Tuas Limited's proposed acquisition of M1. The suspension follows the discovery that its Simba service may have been using radio frequency bands it was not authorized to use in breach of Singapore's Telecommunications Act. Look at that fall. 62% lower, incredible. Also Elders, it was out with its half year, lifted net profit after tax by 17%. Revenue rose by 31%. However, it did warn on diesel prices and how that could flow through. And again, really, really steep falls, down by close to 21.5%. We did see Medicus rising after securing a 7-year, $90 million contract with the U.S. healthcare group Beth Israel Lahey Health. But I think some of the cream was taken off of the top because I had a really good chat with Claude Walker from A Rich Life. Look, he said that the announcement that came around the resignation of a long-serving executive, former CFO, current head of IR and operations, taking resignation steps, will be leaving the company in August. He reckons that was probably a bigger story than that contract win. He's not saying it's destroyed the thesis, but he is running the ruler over that company in the wake of it. And it was the stock of the day. Not everybody necessarily sees it that way, so stick around and we'll get you across that. All right, welcome to the COB, Josh Gilbert from eToro. Long time between drinks, Josh. Nice to have you back. Could you just talk to us about today, because I did mention, that bond route, and that really seems to be telling us something.
Yeah, great to be with you, Nadine. Look, it really is. I think the bond market is ultimately telling us that the market is worried about inflation and it's not beaten yet, and that's ultimately coming down to what we're seeing from oil prices. I think when this sort of conflict started, I think back in February, and we sort of sit where we are now, I think it's sort of dragged on longer than many, I think, expected. We've had, many times where we've had hopes of the ceasefire. Obviously that lasted for about 2 weeks. We've had a start in communications and a breakdown in those talks as well. So I think this has dragged on, I think, longer than a lot of market participants expected, especially analysts. And I think that's starting to really show through in oil prices. We've now had, Brent, really elevated above that $100 mark for a strong period now. And I think that's why we're seeing the bond market react. And ultimately, that's all coming from this idea that the Fed is looking likely to have to hike rates in the back end of the year. And that's a big change, almost a handbrake turn from where we were, at the start of this year. Absolutely.
So, what do you think that may mean for equity markets going forward? Because of course we were being so bolstered, not here locally, but in the US in particular, by that whole AI trade, and we've got a big test of it coming this week.
Absolutely. Look, I mean, so far what we're seeing is really the US consumer holding up better than all people expected, but also what's driving markets is earnings, right? Q1 earnings growth of over 27%. That's the highest that we've had in years. It's the 6th straight quarter of double-digit growth, and obviously tech is really leading the way. And although we're hearing companies talk about that Middle East conflict, we're not seeing really many companies downgrade or lower guidance on the back of that, and I think that's the real standout for us. But as you say, a real big test to sort of finish off this week with Nvidia. That's obviously the big name. It's the last big ticket name on the earnings calendar. But the bar is high, right? Coming into this every quarter, the expectation is massive, for Nvidia. But the signals heading in, I think, are pretty solid, right? AMD delivering a massive beat, lifting full-year guidance. Intel and TSMC as well, also coming through with really strong results. And then you also had those hyperscalers all sort of really reaffirming and lifting their CapEx guidance as well. So look, I think that sets up a constructive backdrop for Nvidia, but also at the same time, it also means that a lot of good news is also priced in as well, right? We've seen that from how well the tech sector has performed, and particularly Nvidia. So look, a lot of eyes going to be on Jensen Huang this week to deliver, raise that bar once again. And I think the key thing here is if he doesn't, and we don't get that from Nvidia, the market's really in a position that this isn't just Nvidia that takes a hit. It's the whole AI market as well as the broader market as well. That's not just ripple effects for the US now. That plays much broadly, right, across into South Korea and those sort of AI markets. Nvidia is the poster child, $5.5 trillion market cap, right? That's double the ASX 200 as a market cap. So it just goes to show how big this company is, not just for the US market, for just broader equities in general. Yeah.
Okay. So if we've got solid earnings there, is there anything that we need to really know in terms of like the data? I mean, we're told that we're sort of shifting from a data dependent Fed to something else under new chair Warsh. What will we be looking at in terms of macro in the US to start?
Yeah, I think the big Fed event is likely to be the minutes coming through, midweek. As I say, markets now pricing that December hike. I think 75% chance almost now of that December hike. So I think really minutes are going to be scrutinized for any sign that we are really starting to see the committee, shifting towards that sort of hawkish tone. Or if the bond market is ultimately getting ahead of itself. We know that there's a lot of pushback ultimately from Trump, to cut rates. We're clearly not in a position from a macro perspective to be able to do that. And we know that, there are a few officials that are clearly pushing back on the idea of hikes, but also, the idea of even just keeping rates on hold as well. So I think that will be a real key number to sort of keep an eye on, during the week. I think for us, that's really important. And also, I think just in general, any sort of, continuance of talks between, the US and Iran, I think that's going to play a massive part of that. Everything that we're looking at in markets at the moment continues to sort of really come back to sort of the Strait of Hormuz and sort of if we're seeing, anything flow through there, right? Because supply chains, etc., are all, at sort of risk here, and that plays a massive part into sort of inflation. That comes back to everything that we're looking at in markets right now. So I think, any conversations there, ceasefire talks, etc., will be big in markets, but those Fed minutes, I think, are probably the biggest macro focus from the US this week.
Yeah, and we've got minutes here locally from the last RBA meeting in which they raised rates once again. So what will we be parsing those minutes for?
Yeah, I think the difference this time out is the almost overarching decision to hike, right? I think it was 8 votes to 1 last time out. Before that, we had a bit of a split vote, 5 to 4. So I think it was a very clear sign that the board felt it was necessary to raise rates for the third consecutive meeting, and ultimately telling us hawks have pulled across those doves, right? I think what's important from that, what we're going to look at is what changed. Who held out? Why did they hold out? Why did that one official not decide to move towards the hike? And I think that we're clearly seeing that Middle East conflict is playing a bigger part of the board's thinking. And I think ultimately where we're seeing oil at the moment is warranting probably the decisions that we're seeing from the board so far. Obviously, we know that fuel prices are a big part of that so far, and it's having an effect, on the consumer in general. And of course, the growth, ultimately is looking lower on the back of that. So I think really what we're looking for is how the board is thinking about this cycle. We're 3 hikes in, right? Are we now looking at the conversation for a pause? Because I really think that, a pause at this point until later in the year is probably very likely. I think, we mentioned it a bit earlier. The sort of the idea now, I think, is moving towards that data dependency and probably, have a bit of leeway now to be able to sort of sit in their hands. I think Michelle Bullock sort of really alluded to that in her press conference after that sort of third hike as well. And then from there, I think it's going to be a case of we're looking towards those data points. We've got, unemployment numbers this week as well. So I think the point from it is going to be, okay, are we seeing signs of them sitting on their hands, and what carries the most weight from here? Is it going to be the labour market, inflation expectations, or ultimately is it going to be that Middle East conflict?
Oh, there is so much to take into consideration. I'm just struggling with my laptop a bit, but what's Bitcoin been doing amongst all of this?
To be honest, I think really during this whole cycle of what we've seen going on in the Middle East, it's played a relatively quieter period, and I think that's unlikely or unusual, I should say, for us to say during periods of uncertainty. Sort of really sat around about the $80,000 mark at the moment, and holding up. We've seen a little bit of weakness today coming in, down about sort of 2 or 3%. That's coming from, I think, broadly what we're seeing in the bond market and a bit of risk off. We're seeing gold lower as well. But yeah, it's held up pretty well. And I think that's just coming from, a number of factors. We're seeing sort of big regulation changes in the US. We've obviously got a very pro-crypto president coming in the US as well. And ETF flows continue to be pretty solid as well. We're not seeing sort of really any massive changes. I think the reason we're at 80,000, I think back at the end of last year, we were at 120,000. So we saw a pretty significant drawdown coming into this year as well. And for the time being, I don't think we're seeing too much on the downside. When we think about equity markets and how they've rallied in this year, we haven't seen the same coming from crypto assets and particularly Bitcoin, which is why I think we're sort of seeing it hold up better than the most assets. So this is unusual for me to say, but it's been a pretty boring time for Bitcoin at the moment. But I think that does start to change in the back end of the year, particularly when we see those regulations coming through and it being much easier for sort of companies to hold Bitcoin on balance sheets and things like that, especially when we're seeing big corporations as well continuing to want to add this asset to their global allocations.
All right. Well, look, we really appreciate your time today, Josh. Thanks so much for bringing us your insights.
My pleasure. Thanks, Nadine.
Joining us from eToro. Yeah, I hope you have a good one too. Look, I said that the stock of the day was Pro Medicus. I spoke with David Novak from Wealthwise Education and Luke Larative from Seneca Financial Solutions.
The turnover is 48 million average per day, so it's no problems getting in and out, but it's a very tightly held shareholder register. So it can move up and down very quickly from where it is. So, but right now the trend is not saying it's not your friend. I mean, they keep coming up with these positive results, contracts like today, this morning they announced. But yeah, just on valuation, it doesn't scream at me as a buy right now.
You know, the core business is still going really well. They've got $220 million in cash, no debt, got a buyback they can deploy. You're probably right that it's not excessively cheap in a vacuum. Probably got to look at that in the context of, cash flow return on invested capital and kind of the quality and growth and predictability of earnings growth here that you probably can't really get with almost any other company on the ASX. Look, it'll be a buy for mine. It looks pretty good to me at the moment, and it's kind of half the valuation it's been on in the past, or even less, to be honest.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
So just a bit of breaking news, actually. Anglo American, so the London-listed firm, has said that it will be selling off all of its Australian steelmaking coal mines to a UK-based miner called Dilmar for up to $3.9 billion. That London-listed Anglo selling its Australia coal mines as it simplifies its portfolio. So listen, let's take a look at some of the companies that move this market to the upside. Linus, so we've got China and the US talking on rare earths, enough to help boost this miner higher. Computer share up by close to 4%. I'm not seeing any news, so that's an interesting move there. Woodside Energy, Santos, no big surprise while we're watching those guys move higher, and Pro Medicus in the wake of that contract win. It wasn't all good news, as we can see reflected in the moves the index made. So some pretty incredible sell-offs happening with that regulatory concern coming through in Singapore for Tuas, down by 62%. Elders warning on diesel fuel prices, down by 21%. Brambles cutting its outlook, down 18%. Catalyst Metals and West African Resources. It was a really bad day in the gold space as well. Okay, in the small cap world, Island Pharma was higher, Pacific Edge and Energy World flipping the page though, and we do see what Wade being Comet Ridge, Strickland Metals, Cauldron Energy and Star Pharma. Tonight, as Josh Gilbert from eToro was saying, we're going to be looking very closely at what's gone on in terms of the Middle East. We also have the Italian trade balance due. I'm going to be setting my alarm for that one. We've got G7 meetings, day 1 of that happening. And we also get the new US housing market index, which is an interesting one to watch. I was chatting with Jeremy Schultz from ClearBridge. He's the chief economist there. And on his chance of recession dashboard. He's pointing to strength in the U.S. market. He's not anticipating a recession in the short to medium term in the U.S. Tomorrow, we do have RBA Deputy Governor Hauser speaking. We'll see if he drops any insights into what we'll read in the minutes at 11:30. Also, you won't see Juliet Sally at 11 o'clock tomorrow because she's going to be in the room with Treasurer Jim Chalmers. He is speaking at a Bloomberg event in Sydney. And we get producer prices from New Zealand. So looking forward to all of that, but particularly Hauser and reading those RBA meeting minutes. Okay, so final check-in on this local market. It's not a great setup for the overnight session, not gonna lie. We've got bonds breaking down, global stocks skidding, really as we're watching this price of oil rise, because that meeting with China's Xi Jinping, President Trump came home without any sort of a real push to, alleviate some of the tension in the Middle East, and we've still had drone attacks, one near a nuclear facility in the UAE, not good news. And so when we look at the S&P ASX 200, that's the COB Australia index on your screen, by the way, deeper losses, down by 1.45% to 8,505. So drone incidents in the UAE and Saudi as this Iranian war deadlock really does drag on. Look, you may have missed a number of really great interviews on AusBiz throughout the day today. If so, I really encourage you to catch up online, ausbiz.com.au. If you usually listen to us in podcast form, there's a lot you're missing out on the website. So listen, I hope you have a healthy and a happy evening. Stay warm, and we look forward to seeing you 9:45 tomorrow.